Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, global markets reporter at NASDAQ. Joining us at the MarketSite studio in Times Square, New York City, Hubert Danso is back with us. He's a chairman and CEO of Africa Investor Group. Hubert, it is great to have you back. It's been a number of years that we've had you at MarketSite, and of course you're in town for Climate Week in New York City. Tell us about what's happening with green tech investments in Africa.
Well, green tech investments in Africa, I mean, it's really about the overall new narrative around Africa's investment opportunity. And as we know, we're in an industrial revolution now, which is driven by natural capital. So in terms of the green transition in Africa, we've got like $3 trillion worth of projects called nationally determined projects that are about to be, involved and opened up to the private sector and the investment community. So we as the long-term institutional investment community are extremely excited about, there's a changing narrative here, Jill, right? When you're at COP26 and you heard about all this finance sitting on the sidelines, it didn't really talk about the long-term institutional investors, which is my constituency, pension funds, sovereign wealth funds, insurance companies. So we're now seeing a bigger shift about, for this transition to happen, for these sort of $3 trillion worth of projects to happen, for Africa's $4.8 trillion of carbon credit headroom between now and 2030 to be securitized and the value unlocked, it needs long-term equity, long-term capital. So for us, our narrative, even before a lot of these statistics, which is really our sort of gut feel and the general data, was simply saying that, climate change, the transition is one of the best investment opportunities of our time. And now we're beginning to actually see a lot of change between the relationships, right? The relationships used to be between development finance institutions and governments. Now the real mantra across the continent is institutional investor, public partnerships. So, us as owners of large pools of capital, private capital, and governments as owners of large programs of infrastructure, we're really coming together and doing some very exciting things.
It is really interesting what's happening in Africa. You have a growing middle class, you have a young population. FinTech is really making headways there, green investing. I mean, these infrastructure projects is what's going to continue to fuel that middle class, because that requires skill sets, it requires education. These are good paying jobs. And I think, over the next couple of decades, you're really going to start to see a leadership shift in that area.
Absolutely, and I think that's why if you bring long-term capital, we can really invest on a 50 to 100-year basis, really, and start beginning to look at those bigger, broader horizons. And we all know that Africa is going to have 50% of the world's youth by the end of this century. Now, if you just marry that also with the fact that the continent has so much opportunity in terms of green hydrogen to begin to sell into the rest of the world, some of these old classical risks that used to be a challenge like currency risk, well, if you're investing in foreign currency in a massive green hydrogen installation and infrastructure project in the continent, and you're investing in foreign currency and your offtake is in Europe or elsewhere in foreign currency, you can begin to see all of the enfranchisement of economic opportunity and upliftment. So you've got, 50% of the world's youth, you've got, and then you imagine if upper class, middle class, economic potential starts really filtering up. Africa is going to be a very serious geopolitical and economic player in the rest of the world. And that is what pension fund investors, sovereign wealth fund investors, if you look just at the resources when we talk about green technologies, there's already a shortage. Only 50% of the African continent has been geologically tested. Now, all of the survey results suggest that Africa has at least as much unknown resources that it already has that are proven. So that means that we're going to be a massive player in the battery metals, all of the critical minerals that are required for the turbines, so all of these technologies selling into a $10 trillion and growing global green industrial economy. And that is how we're going to start adding value. Because as you know, we've just launched last year the African Continental Free Trade Area, which is one of the largest, in fact, it is the largest by number of countries, free trade areas since the establishment of the World Trade Organization. So when you begin to see how you can leverage that, and you start adding value to your goods and getting access to a $10 trillion and growing market, I mean, it's really interesting times.
It is. It's almost hard to imagine just the scope of it, because, I mean, the numbers start adding up when you think about 50% of the world's population, the youth is going to be focused. There are trillions of dollars worth of projects. And as that exponentially multiplies as you go through the years, it really is interesting to follow. However, I do want to ask you about geopolitics. You brought that up. How do you manage the geopolitical risk?
The geopolitical risk, I think, really is when you begin to look at what we're calling institutional investor-public partnerships. What you're actually getting there is you're getting alignment, because the majority of the institutional investors from Africa are quasi-government institutions. So what you're actually doing is you're actually getting the government to invest on equal and aligned terms with global capital.
Right. So the funds go to the projects.
The funds are specifically
Right.
to the projects, and they're not only specifically to the projects, they're managed by investment experts and professionals that are very similarly constituted from a governance perspective, from an investment thesis perspective, from an investment policy statement perspective. So there's real alignment there. And that is the issue. That's where the real opportunities come. When you actually get private sector investment professionals working together that have the same values, the same approach to governance. And then, part of that political risk used to be, well, if I invest and I get a concession and the tariff is set at a certain rate, the economics change when a government wants to change that. That's less likely now, if not likely at all, because the government, if they change that tariff, they're undermining their own investment. So we're all there on, aligned terms.
So you've seen improvement with governance standards. For sure.
Absolutely. Look, one of the things we launched at COP26 was something that, look, if you look at this classical sort of multilateral development bank-driven public-private partnership framework, it takes about 8 years to get a single project done. Now, we have to bring $3 trillion worth of projects to market and at least mobilize the capital by 2030. That's 8 years. The world has only been able to mobilize $2.8 trillion for renewable energy in the last 20 years. So the legal and regulatory framework has to change, and we've actually commissioned a law firm, and they're actually putting together this institutional investor public partnership model law. What are the objectives? Two. One, how can this law enfranchise and drive the mobilization of private capital at scale? And two, how can that private capital then be deployed at speed? Right, so we take out a lot of the bureaucracy, and we're working very closely with governments on that. In fact, just down the road here, 2 blocks, we had a number of heads of state here that we were working with. We had 8 ministers of finance where we were talking about our collaboration on this institutional investor public partnership. We had that meeting just on Tuesday. Why? Because the governments have realized, if we continue with the same model, our infrastructure deficit grows. Just COVID alone took our sustainable development goals sort of target, of sort of 2030 and all the rest of it to 2082. Now, when you start looking at the challenges that this sort of security pandemic in Europe are throwing up, we cannot afford not to build a stronger relationship between the larger pools of capital. Look, multilateral development banks, if you look at their collective balance sheet, that's about $1.5 trillion. If you look at our sort of global institutional pool of capital, it is $200 trillion. And that is really the new relationship that governments have understood. Right. There are ways for us as universal owners of the market to really have a very strategic collaboration that uplifts everybody.
Well, then you also start to think about the continent as a global capital markets hub.
A global manufacturing hub for green technologies and green finance and investment. You're absolutely right. Because look, the rest of the world has to decarbonize. Africa has to industrialize. There's a perfect fit. So you're going to get a lot of the companies that are going to get penalized for their, sort of highly carbon intensive manufacturing processes coming to set up shop in Africa. That's where we can begin to add value, build the skills, build the infrastructure to develop, manufacture, and evacuate the key end product.
Right. Yeah. Well, all right. Hubert, we appreciate the insight. Thank you so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.